I see there's still a bunch of people that are still logged in, so I'll sort of just kill a couple minutes here and talk about a couple of things we're going to be doing today. First of all, again, thank you everybody for being on today. We had a great response to today's webinar, so thanks for joining us. I have not done one of these for, I think, about 6 months. So for all those folks that have been on my webinars for the last 5 years, welcome back today. For those that are new, great to have you here as well. We will take questions on today's call, so we're not going to open up the microphones. We generally don't do that if we have a group of over even 10 people, and the group today is going to be much larger than that, so the microphones will not be open, but we will take your questions at the conclusion of the webinar. So if you look to the right of your screen, you have a dashboard. On that, it'll open up, and there'll be a little button that says questions, and you click on that little button, and any time during the webinar, if you have a question, type your questions into that queue. And at the end of the webinar, we will be answering all those questions. So again, thank you and welcome everybody. I've got some special guests on me today. I want to introduce all those folks first. Chris Erwin is here with us today, as is Jake Underhill, Ben Wallace, and Bill Morgan. And this is something unique for us. We've done many webinars over the years that had guests. Obviously, we generally try and have a guest on. We've never had a webinar where we featured not just 4 guests, but 4 markets, 4 different markets, as well as 4 different companies and what they do in those markets. So we're going to show you some examples of the particular markets that they're in. We're going to talk a little bit about their company, and we're even going to show you some property. For those that don't know me, my name is Charlie Castro. I'm with Buy Right Properties. I've been doing these webinars for about 5 years now. I'm also the host of a radio talk show called Real Estate Radio Live that's carried on the Wall Street Radio Network in San Francisco, KDOW 1220 AM. We're going to be in about a month and a half. We're going to start on Blog Talk Radio, which is on the internet. We're going to be doing some podcasts, and the primary reason we're moving away from the station and into the podcast is simply for exposure. When we broadcast our shows in San Francisco, they're on Thursdays at 2 o'clock. A lot of people aren't in the San Francisco market. Obviously, they can't listen to it live, and so what we're doing is we're going to open it up. We're going to have a show every week. We're going to focus on a particular market or a particular item that's happening in the real estate world. So be on the lookout for that. It'll start sometime in mid-August. So we're going to do just a couple things first before we get started. I just took a couple things off the internet this week that I thought were interesting. And this kind of pertains to what we're going to be talking about today, which is investment real estate and how you can make the right investment for you in the right market for you. And so I saw this on U.S. News. This is the money section of U.S. News just this past week. And I thought it was interesting, the good and the bad and the ugly of real estate investments. And of course, many of you are pros at this. You've been around a while. You've seen it all. You've seen the good investments, the bad investments, and everything in between. But this was interesting to me because it sort of focused on what we're talking about today, which is turnkey real estate. And this particular article goes on to say, know your market. One of the key things you want to do is you want to understand your market. You want to look for the right deals in that market. And the market's critically key. The market is key, but as I've talked about many times, the market's not only key, but it's key to who you do business with in that market. We'll talk about that a lot today. It goes on to talk about turnkey properties and how that is really the best place to invest. And this article has a kind of a cute little quote. It says, it's a lot like buying a take-and-bake pizza. All the ingredients are there. All you have to do is buy it. And that's sort of what we're going to talk about today is turnkey real estate. We've seen a lot of different investment styles over the years. Flipping houses, obviously, is something that early on in the industry in particular, a lot of people do flips. Not so much now. When we look back over the last 5-6 years of people who have invested in real estate, something that's really clear is those that have had the greatest level of success are the ones that bought turnkey, stabilized, cash-flowing, fully managed assets. Again, that's what we're going to be talking about today. And this article just goes on to talk about, if you're flipping houses, there's some challenges there. There's costs, or can be hidden costs associated with renovating a property. It can decrease its net return. Interestingly, the 2 pieces that can cost you when doing flips is the front and the back end. Up front, you might misjudge your rehab costs. You might buy a property for, say, $100,000 and estimate $25,000 in repairs with an aftermarket value of, say, $200,000. And that's your model going in. But you get into it, $25,000 in repair. Renovation costs were much higher. And then on the other side of it, you realize that I really couldn't sell that for $200,000. It was really only worth $185,000 or whatever. And so it's those 2 pieces that generally, there's all kinds of things that can happen in the middle of that. But on those 2 sides is where the risk lies. What's it going to cost you to rehab it, and how much can you really sell it for? And that's usually where flippers run into property or run into problems with their property. The last piece it talked about was vacant property as a mixed lot. This goes on to talk about kind of a horror story. Someone that bought a rental property and they had these bad tenants and they spray painted the walls and did all this sort of stuff. It's so true, and it's a critically important piece of buying investment real estate. when you buy a turnkey product like we're going to be talking about today, when you buy a product like that, you're buying it turnkey, but you're also buying it through a professional, and we're going to talk about these 4 professionals. You're buying it from a professional who's vetted out the tenant. You have a much greater likelihood of getting a quality tenant by a professional who has experience in the market, that vet their tenants out, that value the quality of that tenant for their investor. I mean, clearly, if you have success in this business and you're still doing this in the year 2015, and you've had the success that these gentlemen have had, a lot of that is based upon the fact they've had great success. And part of that success story comes with the fact that they provide a turnkey product that has quality tenants installed, and it's so critically important to the equation, because in a lot of cases, if you buy a piece of property from the wrong wholesaler, you can end up with a bad tenant, and your experience out of the gate can be a poor one. So that is a very critical piece to buying investment risk. And just as I'm talking about renting, what's going on in the rental market, and I'm not going to belabor this one too much. I mean, I think most of us now know this is probably the greatest time in terms of the rental market in the United States. And a lot of that's due to the fact that, lots of people lost their homes. People are looking, there's more renters now than there were 5, 6, 7, 8 years ago. That's a sad statement for America and for Americans, but for the people that are in the investment real estate market, it's a good thing, because there's plenty of renters out there. Quality of tenants in many cases are much higher. And so those sort of horror stories that you hear when you're buying from quality wholesalers and property management groups, those stories tend to be diminished. I've been doing this slide for a number of years, but it really is true. It became really clear a couple of years ago what the secrets were. And, some of this stuff I got from, guys that ran hedge funds, guys that were large institutional type buyers that understood what it took to be successful in the market. So these are like the 7 keys for how a smaller investor can compete in a market that's still littered with a lot of hedge fund buyers, large institutional buyers. So number 1, buy below market value. If you buy something off the MLS at that market value, that's mistake number 1. And you want to buy direct from the selling party. What do I mean? In years 2008 through 2013, I would say there were still a lot of what I would call wholesalers out there. There were guys that were buying properties from people like the gentlemen that are on the phone today, on our webinar with us today. They would buy them from folks like that, and then they'd mark them up, and they'd resell them to investors like you. And there was a big market in the middle there. You weren't buying it directly from the selling party. You were really buying it from a third party, generally a marketing company, not a company that actually does the work, buys the house, and places the tenant, does all those things. But there were a lot of people were buying it through marketing groups, and there was big markups on those. So when I say buy direct from the selling party, what I'm referring to is buying it direct from the guy that bought it, rehabbed it, fixed it up, and is now going to sell it as an investment to an investor. That's who you want to buy your property from. I already mentioned this. Don't buy anything that's not off market. If you're buying on the MLS, you're just not getting the best deal. Look for both year-on-year appreciation as well as ROI. And why do I say this? A lot of people say, for example, we like the Atlanta market. I like the Atlanta market too. There's a lot in the Atlanta market. But in the Atlanta market, you're going to get nice appreciation. It's a strong market there. It continues to grow. The values of the properties are getting greater all the time. But the ROIs are low. You buy a $700 rental in Atlanta, it's going to cost you $65,000 to $70,000. You can buy that same type of rental in other markets that we'll talk about today for a lot less than that. So you can get both rate of return, cash on your money, along with appreciation in a market that's continuing to improve. Have your infrastructure in place, and this again is going to be the key what we're going to talk about today, and that is just knowing your partners, knowing who the person was that did the rehab, knowing who the person was that vetted out the tenant, and then knowing who that company is that's going to take care of that property for you. Your real estate investment should be a passive one. It should be one where you buy the right property in the right market, and you've got the right party to take care of that for you, both short and long term. Having your infrastructure is critically important. And I've been telling people this for years. People call up and they'll say, I hear that the Cleveland market's a great market, and it is. And Cleveland's actually a market that's actually getting a lot better. But I don't know a lot of people down there in terms of property managers or turnkey operators that provide that full service to the investor in Cleveland like I do in other markets. So I would say, it's a good market, yeah, but remember, the market's important, but it's equally as important to know who your partners are in that market. It's just as important. You can have a great house, buy it at a great price, in a great market, and if you didn't have the right guy doing the rehab work for you, you're going to have problems. If you didn't have the right group vetting out the tenant, you're going to have problems. And if you don't have the right group managing it for you on a monthly basis, you're going to have problems. So that great investment, that great market may end up not being such a great investment. So know who your partners are and have that infrastructure in place. Understand your strategy, whether it's short-term or long-term. If you're going to do flips, know that you want to do flips going into it. If you're looking for a long-term buy and hold, understand that as well. Understanding your strategy helps us give you the proper consult as to what your best strategy is for you, what the best property is and what in the best market, etc. So understand what you're trying to accomplish. And then finally, only buy fully rehabbed and rented or rent-ready properties. Now, those of you that are on our mailing list, I know a lot of you get our mailers every day. You're starting to see a lot of REOs. You're starting to see a lot of distressed property. We've only done that because A, it's now available in some cases, and B, we still have people looking for that. If you have the right skill set and you understand what goes into buying a property in Indianapolis for $5,000 that's been sitting vacant for 3 years, if you understand what goes into that, yeah, those can be great deals. But understand that going into that, you have to have the skill set to be able to fix it up, rehab it, get it rented, understand the costs that are associated with that. You need to understand those things. My experience has been that the folks that have purchased turnkey, fully rehabbed or rented, and it can be vacant in some cases if it's been fully rehabbed. But buying that particular model is a lot safer investment than buying product that you have to, rehab and do all that work through yourself. This is just our website. And I know most of you get this. If you're on our mailing list, you do see our email blast, buyrightproperties.net. If you would like to profile some of your properties on our website, contact us. We try to put the tapes of the properties that we offer on the website, and of course all the tapes that we're going to be talking about today will be posted up here as well. So we're going to get into now 4 specific markets. I'm going to talk briefly about the market. Then I'm going to talk about the individuals in that market. Ben Walls, in this case, is here with us today, representing Kansas City, Missouri. So we're going to start with Kansas City. Ben bought his first investment property in 2013 right out of college, and has been very successful at it over the years. In 2010, he decided to make this his full-time career, originally focusing on fix and flips. Love to hear Ben's backstory as to how he went from fix and flips into turnkey property. He's been a party to over 1,000 transactions in various markets across the country. He's been featured in several news outlets, been a guest speaker, guest panel speaker at some of the IMN conventions. And Ben is currently focused on a thriving market in Kansas City, Missouri, providing turnkey, fully managed properties. He's with Global Resource Capital. They pride themselves on customer service, finance, and asset management. Global Resource Capital, these guys are a turnkey company. So if you're interested in the Kansas City market, I'd encourage you to get Ben a call or give me a call. I can put you in touch with Ben. You can learn more about the market. Now, many of you know about the Kansas City market. I started profiling Kansas City about 8 or 9 months ago, I'd say. I did my first webinar on just Kansas City. And I learned a lot of things about the market. One of the things I learned was it's one of the better rental markets in the country. 40% of the market there is rentals. It's a great rental market. It's a younger market. I think the average age in Kansas City was something like 8, fairly younger rental market there. And the job market's solid. And I like to put the logos of professional sports teams on a particular city because that does mean something. If there's a professional sports franchise in a market, that's indicative of the type of the economy that market has. In Kansas City, of course, they have the Kansas City Chiefs and, of course, the Kansas City Royals. So it's a solid market for investment real estate. These articles here are just sort of talking about, what's going on in the market currently. It says the National Association of Realtors say pending home sales, which is based on contract signings, jumped 112% in April, rising for the 4th consecutive month. That's its highest level since May of 2006. Kansas City is a market that just continues to improve and get stronger all the time. We've done a lot of sales in Kansas City over the years, and yes, this article is absolutely correct. The confidence in the housing market there jumped 5 points in June to its highest level since 2005. Again, according to the National Association of Home Builders, the market index jumped 5 points in June to 59. So the market there just continues to get stronger and stronger. You can see by the type of inventory Ben has available here. These are solid rentals: 3 bedrooms, 1 bath, 1,500 square feet, $1,000 rental. That's a strong rental. Your NOI or your sales price is rather $79.9, and your estimated ROI is 11.5. They offer a 12-month maintenance warranty, and there's financing available. And by the way, that is probably the one thing that's changed. You're going to hear a little bit about financing today, not in detail, but we'll be talking about that as we meet you and talk to you about these particular markets. But if there's one significant thing that's changed, for those that are on, say, I saw a lot of familiar names on here, if there's one thing that's changed the last 12 months more than anything else in this space, has been there's now some financing available. You can get financing. So if you're looking for that to acquire your next investment property, talk to us how we might be able to help you on that. Again, Applewood Drive, that's a 3-bedroom, 1 bath, pretty big house, $1,750, renting again for $900 a month. You can see that the ROI there is a solid 9.3%, sales price $79,000. And again, They offer a 12-month maintenance warranty with financing available. Again, another one, just another example, 3-bedroom, 1-bath, renting for $850. You can see the rents here are all solid numbers, nothing in the 500, 600 range, 650. You see a lot of that in certain parts of the country. These are all solid rentals. This is a sales price of $65,000 with an estimated ROI of 10.8. Now, I should point out, we're just giving examples today. I've got tapes on all these from all these gentlemen that are on with us today. So if you're interested in these markets, this is just a sampling. We're just going to give a little sampling of what's available in these markets, just to give you an idea of what you can expect in terms of price points, yields, types of ROI, the kind of rents you're going to get. I can tell you that all these homes have been rehabbed. I don't have any interior pictures today, but again, if you contact us, we can give you all the information with regards to the interior of the property and that sort of thing. And here's just another one we'll just take a look at real quick. It's on 57th Street in Kansas City. Again, a 3-bedroom, 2-bath. And again, look at the solid rents on these, $900 a month. You got an estimated NOI here of $7,000 a year. Sales price, $72,000. Your ROI in this is at 10%. Again, 12-month maintenance warranty. That's pretty awesome. Not a lot of wholesalers do that, folks. That's unique. And then there's financing available on these properties. And so Kansas City is obviously a solid market. Again, I did the webinar on one of these about 6-7 months ago, and I think I spent about 45 minutes just talking about Kansas City. We don't have the time to do that today, but for those that know the Kansas City market, you know that it's one of the top investment markets of all the markets out there, and I think it was number 4 in the country last year for investment real estate. Detroit's an interesting place, and we're going to get to Jake in a minute. I'm talking a little about Jake, but Detroit's an interesting place because it's interesting. When this all sort of started in 08, 09, when the housing market sort of crashed, man, Detroit got beat up. I think more than probably any other city. The economy tanked. We all know that. The housing market tanked. Yeah, it tanked in Detroit too. But the automobile industry tanked too, and so they got slammed from every direction. And of course, many of you know, they filed bankruptcy. So this is a pretty interesting story that we're doing in Detroit. I never would have envisioned 2 years ago we'd be doing anything featuring Detroit, but we'll talk about that here in a few slides. So meet Jake Underhill. He's with Income Source Properties. They're experts at, again, turnkey rental property based in the Metro Detroit area. Each one of these properties that you're going to see, they all undergo a thorough renovation. Their focus and goal is to buy these properties, get them rehabbed, and then obviously be able to provide tenants, vet the tenants out, and provide these as turnkey, cash flowing, stabilized properties. So some articles about Detroit. I'm just going to sort of leave these up here on the screen and just sort of talk through some of this stuff too, just give you folks a sense of what happened in Detroit. As I said, the economy there just got slammed hard, and I remember it wasn't that long ago where you could pick up properties there for $5,000. Now those weren't rehabbed and rented, obviously, but you could pluck properties off the book list and tapes the banks had available. I mean, there were just literally streets of homes that were vacant and needed rehab, and you could pick them up for a song. And again, I honestly did not think any time in the last few years that I'd ever be doing a webinar in Detroit. But true story, the last 6-8 months, I mean, I've had as many calls about Detroit as any other market because people recognize that Detroit, the recovery, as it says in this article from Newswire or New Wire Investor, Detroit's recovery is starting now. So when's the best time to buy? Well, when you see the market was at a bottom and it's starting to climb back up, that's when you buy it. Of course, the quote at the bottom, kind of sort of says it all. Warren Buffett, I like to buy mispriced things. Warren Buffett said during a visit last year, saying he would gladly buy a company in Detroit. The billionaire investor is well known for his uncanny ability to find bargains and then sell at the zenith of their value. If he has picked Detroit, that's good enough for us. And that sort of says it all. And I've done a lot with Warren Buffett on my webinars over the years because he predicted this market. He predicted where it was going. He went out there and he bought Prudential Real Estate, which is now Berkshire Hathaway Home Services. He did that obviously for infrastructure because he understands the need for infrastructure, like we're talking about today with the 4 gentlemen we have on the phone today. But when you see Warren Buffett look at a market like Detroit and say, I'd buy there, I mean, that kind of tells you all you need to know. But it is a market that's emerging. It's coming back quick. Already investors have spent over $1 billion to renovate things like tourist attractions and Greektown Casino, downtown hotels, restaurants. They're investing in the infrastructure. They're investing in the city. It is investor friendly. And then this quote here, since they made it through bankruptcy proceedings, they have taken serious steps to invite the kind of investments that we've already described. Investment real estate in Detroit, I think, is going to be hot for the next couple of years, and it's going to be challenging. I think when you go past another 12 months, it'll be challenging to be able to buy it, which you're going to be able to buy it right now. So when you see these next couple of slides, you start looking at the inventory there I guarantee you those prices are going to start slowly creeping back up. And yeah, they are sort of the comeback kid. I mean, give Detroit a lot of credit, the city, the people. I mean, all the people in that market there. I mean, they have done an amazing work to turn that city around in a fairly rapid period of time. It's pretty incredible to watch. And then so you see some of these properties. You look at this. You got a $43,000 property. It's got an $800 tenant in it. You got a 15% yield on that. You got professional property manager in place, and of course you've got the team there to be able to take care of you and to be able to take care of the property on a long-term basis. And this gives you some idea on numbers on these. These are in the 40,000s. This is a $700 rental, 13.5% ROI on a $43,000 property, 3-bedroom, 1-bath. And these are the kinds of properties that provide good yields, good long-term investments in a market that's going to continue to climb back up in values. Got another one here on Molina Street in Detroit, 3-bedroom, 1-bath. Again, look at the solid rent on that. That's a nice little house there, $800 rent. You got an asking price of $43,000. You got almost a 15% cap on that. You got your property manager already in place. These are the kinds of properties you're going to see coming out of Detroit now. I mean, these are the kinds of properties that the larger institutional investors love to have because they know two things: A, they're going to get a big ROI, their yield's going to be strong, and B, they're in a market that's going to climb. The market's going to keep improving. It's going to keep getting better. The values are going to continue to go up. They've seen their bottom, and now they're climbing back up. So this is going to be a really interesting one, and I just love what's going on in the North Dakota area, the Williston area there. I'm a little bit familiar with this. I interviewed a gentleman on my radio show about 6 months ago that was actually a lender in this region. Many of you have heard of what's going on down in this region of North Dakota. I heard about it originally about 5 years ago when someone came to me and said, would you do a webinar for us on our mobile homes? This is a true story. This is a true story. They were selling mobile homes in North Dakota for all the guys working in the oil fields. And they were literally just mobile homes. I mean, they were just mobile homes. They parked on a lot, and they were called man camps. And they were parking these guys that were working in these fields, 15, 16 hours a day, and they were charging this ungodly amount for rent. Now, the problem with it was, and the reason I never did it, was because it became pretty obvious that once people start building houses there, which was inevitable, right? And of course, Bill Morgan's going to speak to that in these next few slides. Once they start building houses there, and guys that are working in the oil fields making $100 grand a year and nothing to do, they're going to go out there and they're going to buy themselves a nice little house, right? Housing demand's going to go up. Smart people like Bill Morgan are going to go there and they're going to start building houses. And all of a sudden, those mobile homes they were selling for $50,000 are worth what they're worth, which is about $3,000 or $4,000. Now they're worth $50,000 from a yield perspective if you are going to put a tenant in there that you're going to pay a boatload of money in rent to. But my take on it at the time was there's no after value here because somebody is going to get smart and they're going to start building properties out there. And the next thing you know, these guys will be buying houses, which is exactly what we got in Morgan today. So Bill has been in the real estate business since 1994. He's got over 20 years of experience in the industry. He started a company called Net Worth Real Estate in 2003 to help people catch that vision and get excited about investing in real estate. Ben's philosophy is a good deal isn't something that sucks all the life out of you. A good deal is something that makes your life easier, and amen to that, because that's exactly what it's supposed to be. The investment in real estate should be exactly what Ben quotes in that phrase right there. It should be something that you invest in. It makes your life easier. It provides cash flow for you. Lots of keys to that. We talked about some of that today, and one of those keys is finding the right guys in the right market. And so in 2013, Net Worth conducted a limited test marketing campaign in the oil region of western North Dakota. The result, they sold 30 units in a place called Tioga and 75 units in a place called Stanley, North Dakota. Because of the oil boom, low unemployment, ground floor investment opportunities, and the demand for housing in this region, this is now Net Worth's focus on the most incredible real estate investment opportunity of your lifetime. And that's not hyperbole, folks. I really believe this is an awesome opportunity. The Net Worth team's got a solid team down there offering some really solid properties. If you don't know what will happen in North Dakota, I'll just do this briefly. North Dakota is now the second largest oil producer in the United States, second only to Texas. And there is it is like the gold rush down there. And I've read all kinds of articles about all kinds of industries down there that are booming, not just real estate, but obviously when you have a boom town, you've got guys going out there making nice six-figure salaries for working in fields. And Bill can speak to this, but I think I read somewhere where the people that worked at McDonald's there were making $12 or $15 an hour. I mean, the whole economy there is so stinking strong because of the oil boom. Experts estimate the oil reserves in the Williston Basin between 12 to 24 million barrels. Got a long time to go there before they drain that. The new housing study predicts North Dakota's population will grow to 840,000 people by 2025. That's a 25% increase in the population there. And then 10 counties in North Dakota as well as the country are forecast to grow by 50% in the next 13 years. Those are amazing numbers. The housing explosion of the next decade, Williston will need about 25,000 homes. That's a lot of houses. And the North Dakota Housing Finance Agency says statewide demand for housing is expected to increase by 50% by 2025. Those are just amazing numbers and really an amazing place. And you don't see these types of markets very often, these types of events very often. It's real estate. If you're in the liquor store business, you want to go down there. If you're in the hotel business, you want to go down there. And so it's a great opportunity there for investment real estate. Let's talk about Bill's company, about dynamic property management. Their philosophy is to find the best markets to stand the real estate cycle. It's allowed them to successfully sell over 5,500 investment properties all over the country. That's an important statistic, folks, because when you're dealing with somebody that's got the experience, has done this for a number of years, there's a reason why they're still in business. And of course, picking the market to be in is critically important. And clearly, this is a surging market here. And so this gives you some ideas. Now, this is a brand new construction, 3-bedroom, 2.5 bath, renting for $3,200 a month. So you got your property management, your taxes, and your insurance being sold at $284,000. Monthly cash flow is almost $2,000. Financing is available for 20% down. Your cash-on-cash rate of return is 28.8. That's pretty doggone strong. And if you're going to predict it, you look at two things, right? I talked about that a little while. Look for two things. You get ROI and you get appreciation. So, your ROI is pretty strong, I'd say, at 28%. And of course, your appreciation in a market like this, you have to, when you see those housing numbers that we just spoke about in the previous slides, it's pretty clear this real estate is going to continue to climb in value. The one here in Tioga, another new construction, $3,000 a month in rent, property management, taxes, insurance. Now, I am noticing, Bill, by the way, that your insurance in this part of the world is actually lower too. I picked up on that when I was putting the slideshow together, that the overhead, the expenses there appear to be a little bit less on a percentage basis than some other markets in the country. But again, $227,000 the price. You got $1,600 a month free cash flow. You can put 20% down on that with a cash rate of return of 38.1%. Of course, you can see here in these types of properties, you're talking about new construction, and that just simply means less maintenance. That's why those previous slides we talked about, having that maintenance guarantee for 12 months is a critically important thing as well. So that gives you an idea about North Dakota. Really excited about North Dakota. I know you are too. Okay, the last market we're going to feature is my good friend Chris Erwin, who's on with us today. I've done a radio show with Chris. I've worked with Chris when Chris was working for a hedge fund buying properties. That's how I got to know Chris. And I've probably done more webinars on Birmingham than any other city in the country. And there's a reason for that. Excuse me one second, folks. I'll take a drink of water here. There's a reason for that, and that is that when I first started working the Birmingham market, it was an ideal place for the small investor. The small investor could buy there at a very good price point. He could buy there with an extremely high yield, and there wasn't a lot of competition. Now, I'm going back to 2009 now. Then what happened? Hedge funds figured out Birmingham was a good place to buy, and they descended onto Birmingham. And so for about a 3-year period, well, more than that actually, about a 4-year period, 4.5 maybe, we had a combination of both the hedge funds and the smaller individual investors that were just loving the inventory in Birmingham. Once it got popular and the hedge funds started going down there, it got a lot harder to get inventory. So the Birmingham market changed about 3 times in the last 5 years. But today, to this day, it's still one of the better markets to invest in. Tell you a little about Chris. He's the co-owner of Prime Turnkey Real Estate. They're based in Salt Lake City. Chris spent his early part of his career with Morgan Stanley. Then he became an acquisitions manager for one of the largest real estate investment funds in the country. They purchase thousands of single-family homes every year. I can attest to that because I was one of the guys that was selling them those homes, and we hope to do that again someday. Prime Turnkey Properties is made up of some entrepreneurs who are passionate about helping others achieve their real estate investment goals. They provide investors with rented, freshly rehabbed homes with high returns, and they'll pair you with the best property for your needs. Now, they don't just operate in Birmingham. I'm going to speak about Birmingham today, but Chris, because he's been a buying manager for a large fund, he's been privy to how you do it. What's the best markets to buy in? What's the best price points to buy at? Who's the best rehabbers to use in what markets? Who's the best property managers to use in what market. So Chris has that background and knowledge that allows him to do some things that other people aren't capable of doing just because of his connections through working for a large fund. So now with Prime Turnkey Properties, Chris is profiling some properties in the Birmingham market. There's some others too, Columbus, Ohio. If anybody out there is looking for Columbus, contact me about that. We got a racetrack out in Columbus. I'd love to share that with you sometime. So Birmingham basic facts. Okay, they're the third fastest growing real estate market in the nation according to CNN Money. Not many people know that. They're the third best cash flow market in the U.S. according to New Wire Investor Study. And that's a really important piece. The third best cash flow market. So it's ROI. We talked about that. It's ROI, and of course, I can. Every year I do a webinar at the end of the year, and I would do a synopsis of that year and review. And what I talk about the markets that we spoke about during the year. Birmingham consistently went up 4, 5, 6, 7% every year in appreciation. So there's good appreciation in the market, and there's also good cash flow. They're second in the nation for building personal net worth. Isn't that interesting? Local salaries, rates, living expenses, and unemployment rates. That's how they base that. So for building net worth for people that have disposable income, Birmingham is a great place to live, great place to invest. It's called the Magic City. They did a huge renovation project a couple of years ago. They renovated the whole downtown area. They invested like $1 billion in the downtown. The baseball team, the first slide I showed you was of the Birmingham Barons. I know that's kind of many people know the Birmingham Barons, not like the Dodgers or something, but the Barons is the team that Michael Jordan played for back when he decided to retire from basketball for a while. He played down there in Birmingham. They got a brand new stadium downtown. The whole area downtown has been revitalized. So a lot of good things going on down in the Birmingham area. The Jefferson County School Board is in the top 25 America's best high schools. Not many people would know that. They're the 48th poorest state in the nation, yet they're in the top 25 when it comes to best high schools. One of the largest banking centers in the U.S. And as I mentioned, the city's been investing $1 billion into revitalize the downtown area into that 24-hour mixed-use entertainment district. And that's really what it is: restaurants, bars, nightclubs, the whole thing, movie theaters. The city's home to the Oscars of dining. Who would ever guess that? Birmingham, right? Winner from James Beard Foundation. So there's a lot of good stuff happening in Birmingham, and not many people know it. And again, when I first started operating down there, the reason we loved it so much is because nobody knew about it, and it was a great place to get inventory. It was a great place for yield. The property manager was, it's a small fit. It's a fishing bowl down there. Everybody knows everybody else, so you learn pretty quickly the good guys in town are and the bad guys in town aren't. So Chris has all that experience from buying thousands of houses in that market to find properties that are the type of properties that an investor would want to purchase, and we'll show you a couple of those now. And then we're going to take questions, and I have noticed questions are coming in, which is awesome. Keep asking those questions, and we will answer those questions for you at the conclusion of the webinar. So I will be answering those. If you came with us late, we will answer all your questions at the end. So this gives you some ideas about Birmingham, how it looks, what the properties look like. These are all solid rental properties. I can tell you, I've seen all of Chris's interior pictures. These are beautifully done. These are like, he goes in there, he gets these properties, and they're completely finished. So when you buy the property, you're buying them completely rehabbed. The tenant is typically new. What I mean by that is if you buy one of these properties tomorrow, maybe the tenant's been in there for 3 months or 4 months or 5 mons, whatever, but it's a new tenant, new lease, new property. And this gives you an idea, solid rents, $800 in rent. It's a $52,000 asking price, got a solid yield of 14%. And again, there's some seller financing available. So you might inquire about how you can work with Chris to get some financing on some of these properties. And another one, 3-bedroom, 1-bath, rents for $741, got property management, your taxes, insurance. Asking price is $50,000, and again, solid 14% ROI available, or ROI rather, and seller financing available again. And I'm assuming that all these, I'm assuming that Chris, that there's financing available on all your properties. I'm just going to assume that, and someone may ask that question. Again, all turnkey, fully rehab. Again, rented at $750 for solid rents. Taxes, insurance, get down to an ROI. So the yields are consistent, right in that 14, 15% range. Priced all right around 50 or a little bit under $50,000. So you get an idea of the prime turnkey properties, Chris Erwin's properties down. And again, we have a whole tape of these. We don't just have these 3 or 4 that are profile. I'm just giving you folks an idea of the type of inventory that's available in each one of these markets. And so, now we're going to questions. So I'm going to open up my desk for yours. It's going to get a little bit funny here. I have to open this up, and then we're going to take your questions. And I don't have to help out with it. Okay, the first question I've got is why is the rent so high? Seems like it's high. And I'm assuming the question, well, actually, no, it's two different questions now. I'm assuming you mean, this is a question from Christy. Hello, Christy. The question is, why is the rent so high? Seems like it's high. I'm not sure which market you're referring to. So why don't you take a second, type in the market that you're referring to, and give you an answer to that question, or I can open up the microphones and let one of our panelists today answer that for you. A question in Detroit for Jake, which is in Detroit. Is Detroit more tenant-friendly like Chicago and California, or more landlord-friendly like Atlanta and Dallas? How long does it take to evict through the court systems in Detroit? Those are some really good questions. Jake, if you want to take the mute off, your mute button off here, and I'll ask that question again, and I'll let you answer it. Is Detroit more tenant-friendly? Chicago and California is tenant-friendly. Amen to that. That is true. I'm in California. It is tenant-friendly. Or more landlord-friendly like Atlanta and Dallas? And how long does it take to evict through the court system in Detroit? So, Jake, you want to take that question?
Yes, I got it. Thank you. That's a great question. There is a 30-day eviction notice that you have to post when you have to go through the eviction process, and then it can. I would say that the laws are more tenant-friendly in the state of Michigan. An eviction process should take, after you issue the 30-day eviction notice, you're probably another 45 days out there after going to the judge and getting the sheriff to come and actually do the eviction. So it can take probably up to 2 months to get 2.5 months to evict a tenant.
So to follow up on that, because I know what the follow-up, so that this isn't a place where tenants are likely to squat, because I think that's the underlying point of the question.
Yes, tenants will try to squat, but then again, it all depends on your property management company. If you're working with a professional company that is doing what they're supposed to do, that minimizes those opportunities for the tenants, and it starts with screening the tenants in the very beginning, which we do. I mean, we will never place a tenant in any of our properties that has been evicted before, and so we don't face this very often.
Okay, Christy, I hope that answered your question. We're going to leave your mic open. The next two questions are going to be for Chris and for Bill, so you guys get prepared. I got a couple questions for you guys, but I want to do the next one first for Jake. Well, there's actually a couple for you here, Jake. The first one is a universal question, so I'm going to ask it of you, and that is simply, the question is, I've heard terrible things of what's happened down in Detroit. Why would I invest money there?
Good question. I think we've all heard negative comments about Detroit over the past few years, and like you alluded to earlier, Charlie, Detroit has had some very hard times, but it's bottomed out. We're on the upswing now, which is creating an enormous opportunity for investors to seize some great returns. The economy is coming back. The unemployment rate is down. We're seeing revitalization in the downtown areas, which is spreading out. The suburbs are great areas, great opportunities to buy investment property. And so dollar for dollar, your money just goes a little bit farther in Detroit right now than it can in some of these other markets. And so with the right team in place, you can get a fantastic return on your money and a very solid investment property.
I'm going to follow up on Detroit, and this is from my good friend Jeff Carino. Hey, Jeff. Good to see your name on the screen here. Does Detroit offer quality 4-unit or more buildings in good areas, and what kind of rent and returns can we expect?
There is good. Yes, there is good multi-unit properties available in Detroit. Again, you have to go block by block, and when you get into the multi-unit, we haven't done a ton of the 4 units. We have done a lot of duplexes, 2 units, but the average rent on a 4 unit is probably in the $400 to $500 range. So per door, so about $2,000 $1,600 to $2,000 total.
And what kind of returns would you see there, Jake?
The return on that, you'd still be in the low teens, probably between 13 and 15% on your money.
Okay. Okay, Jeff, if you got to follow to that, punch it back in here. I'm going to switch over to Bill. And Bill, the first question that I had was, I got a couple questions here for the North Dakota region. The question was, the rents seem high there, and the area she was asking about was Williston. So what justifies, those are nice rents, and those are Southern California rents. Describe the rental market in Williston, why you can get those sorts of rents.
Yeah, it's a crazy market up there. Thanks for having me on, Charlie. By the way, you talked about the man camps and everything going on up there. The reason they have man camps is because there's about 6,000 men living in these camps because there isn't enough housing available for them. And the nice thing about North Dakota, I guess from an investor standpoint, is just the weather itself limits the ability to build year-round. And so there's this pent-up demand there of these guys that are living in man camps, and this inability to build basically through the winter. When you have a 6-foot frost line, it gets real difficult to put a shovel in the ground. So all of this creates these high rents and this opportunity for investors.
Okay, so you're and I'm just going to follow this up for Chrissy. I think I know what she's thinking. So when you put a price tag at $2,200 or $2,500 or $3,000 on a door, that's the market value for that property.
That's the market value for the property, correct.
And the other thing I think we should point out too, and I'll let you speak to this because you know this way better than I do. I'm going back a couple of years when I did some research on the Bakken region, and as well as on my radio show when I had, I can't remember his name now, Ryan, I can't remember his name, but anyway, was in North Dakota. It's like these guys in these fields are making like $100,000+ a year, correct?
Yeah, the average oil worker makes over $105,000 a year. So you've got some great tenants that are coming in with a lot of money that have the ability to make, a house payment. In addition to that, a lot of the companies, in order to get workers up there, because the demand for the workforce is so high, they're willing to pay their rents in some of these properties just to provide housing and make it part of an attractive package up there. And so a lot of what we do is corporate leasing versus individual leasing. So it's really a one-of-a-kind market and some pretty cool things happening up there.
There's a couple more questions coming at you, Bill, so stay right there. And the question is, if they're making this kind of money, why aren't they buying instead of renting?
So you've got a lot of people coming up there that are just trying to find their way first and foremost. And a lot of what the workforce is up there is temporary workforce. For every well that's drilled, it creates about 10 full-time permanent positions, but there's also 50 temporary workers that are drilling that well. And so you've got a little bit of that going on. Also, you've got a lot of people that have been down on their luck and don't have the ability to purchase up there. And a lot of the companies still are paying for these gentlemen to fly back and forth. They'll be on for 3 weeks and they'll take 2 weeks off and head home, and the companies will pay for them to do that. I think once that kind of plays itself out and the workforce is sufficient to what is needed up there, I don't think you'll see that. You'll see a lot of guys that have been up there now, and we're starting to see it already. A lot of guys have been up there for a long time, and now they're starting to say, okay, this is a permanent opportunity for me, and we're starting to see a lot of them bring families up and purchase. And so you're getting the best of both worlds up there right now. We're starting to see a huge increase on the owner-occupied side and also maintaining that rental side.
Exit strategies. Bill, talk to me about exit strategies. That's a really good question. I think I know the answer to that, but give from your mouth, what is the exit strategy for somebody investing in North Dakota?
Yeah, we get a lot of people that ask us about exit strategies up there, and one of the neat things, and you presented it earlier, is the cash-on-cash return. If you're putting a down payment of 20% on one of these properties and getting 28% return or 38% return on your money every year, that means you're actually pulling that down payment out of there anywhere between 18 months to 2.5 years, and you've got your money back. So in my mind, the exit strategy is to get your money out as quick as you can, find another property, add on to your portfolio, diversify your portfolio, but stay in the marketplace. and watch it go up eventually as we see more permanent workers flood into the marketplace and look for that permanent permanent housing or that owner-occupied housing opportunity.
Yeah, stay right there, Bill. I got more. I'm going to first more you here. Okay, so are you strictly building there, or are you flipping as well? And are you doing multifamily?
Yeah, everything we're doing there is multifamily. We're not flipping. There isn't really an opportunity for flipping there. I mean, everything that is available is gobbled up really quick, just because, like I said, there's 4,000 to 6,000 men still living in man camps up there.
Yeah, okay. What's the rate of appreciation?
One of the neat things, if you go look at the appreciation rate in North Dakota, is that since 1991, it's been in the top 10 as far as states are concerned. We're seeing about a 7% appreciation rate. So that's really a good indicator to me that it's a good time to be in the marketplace. We haven't seen that huge upswing yet. I feel like it's coming once everyone decides that, you know, $3,000 a month in rent is too much to pay, and companies quit paying or offsetting them that amount because they got enough workers in there. You're going to see a flood of people just heading to that owner-occupied market. And so, yeah.
3 more quick questions, Bill. And I think I'd answer these for you. Do you sell to your tenants? I assume you'll sell to anybody who wants to buy the house, right?
We would sell to a tenant if they wanted to buy a house, but unfortunately, everything that we've been building is gone before we'd even have that opportunity right now.
Okay. Next question, I think I can answer as well. Are you assisting with IRA purchases? And Chris, I've done more webinars with Brian Davis with AccuPlan than anybody else. So with regards to IRA purchases, and I'm sure Bill's going to say, yeah, we can help with that, but if they can't, we can, because we've done that for a bundle of people over the years. But Bill, you do a lot of people buying homes through their self-directed IRA or their 401k?
Yeah, funny enough, we work with Brian Davis exclusively also, and he's done probably 90% of the IRA purchases that we've done up there. So we've got a good relationship with Brian, and he does an excellent job. And probably about 30 to 40% of everything we sell is through someone's IRA.
Yeah, and I refer Brian out to a lot of people too, Bill, and he's my go-to guy, and he takes really good care of our clients. So yeah, and he doesn't pay us very well for it either. That's the darndest thing about Brian. He doesn't pay us for all these referrals we give him.
Well,
okay,
if you got something out of him, that's great.
I got nothing out of him. But he's a great guy, and sincerely, if you're doing a purchase for your IRA or your 401k, your self-directed IRA, or whatever, it's an adventure. If you do one thing wrong in the process, it ends up laying on somebody's desk for 3 days before they call you up and say, oh, by the way, you didn't do this. And so having somebody that's really type A and on top of it is really critical to getting things done in an organized way. And Bill, as you can attest to, Brian's excellent. So if anybody's looking for an administrator, Brian's really, really good. Is building year-round or is it seasonal? I mean, Bill answered that is extremely cool. There, and there is times where around.
I'm sorry, you were breaking up. Could you repeat that?
Should we just ask you a question? Is there building year-round or is it seasonal? I was just saying that, no, it's very seasonal building there. How can I get involved in the multifamily?
Yeah, it is really seasonal.
His question here is a different question here. How can I get involved in the multifamily and hotel deals from both the owning and financing side? You said you do some multifamily. How about hotel deals?
Yeah, if you're looking for hotel deals in the Bakken area, I've got a good friend that is actually doing 6 Marriott. That's the brand that he builds and he manages, and he's got a couple opportunities. So if you're really interested in that, get with Charlie, and we'll find that connection for you.
Hey, Frenchie asked that question. I'll be back in my office in about 2 hours. If you want to give me a shout or drop me an email, we'll schedule a time to talk, and I'll connect you with Bill. So what else do we got here? Oh, Chris Erwin. Question for you, Chris. It was the same question that we asked of Jake in Detroit, and that is, what's the eviction process in Birmingham? The lady asking the question is saying that she heard in Birmingham it could take up to 8 months to get somebody out of a property. How do you address that?
Okay. Well, no, that's a great question, Charlie, and thanks again for having me on the show as well. Eviction process is actually quite fast. I mean, they have to post a 7-day notice, so if you have a good property manager, one of the things that I think everybody is just kind of touching on is it takes good property management. So if you have a good property manager, they go and post a 7-day notice. After that 7-day notice has come and gone, that 7 days, you can start the eviction process. So typically, if you can, again, get your property manager and they understand the eviction process, it's only a matter, I've had some in the past where the tenant has been placed out within about 3 weeks after that 7-day notice has passed. So, they are pretty quick about moving it on. So I've never had an eviction process last, the 8 months that was referenced. So really, my opinion is it's actually pretty quick and diligent eviction process.
Hey, Chris, just for what I saw your note there about you had somebody in Alabama that had an issue that took up to 8 months getting a tenant out. When I saw that, let me tell you what I know. I've been working the Birmingham market for a while. The South in general, certainly Alabama, is a state that's friendly to the landlord. They're not friendly to the tenant at all. And so when I saw that 8 months, I thought, and I see your note here, he must have an idiot running the show. I appreciate that. I wasn't going to call a guy an idiot, but if he had an experience like that, he didn't have a very good property manager. So if you want to contact me, I've moved the questions out of the way of the screen so people can see my name and phone number and how to get a hold of me. But if you get in touch with me, there's a couple people down there I really like, and it depends upon whether you've got a bunch of properties you want managed. There's one group I go to for that. But if it's just a couple, there's one individual down there who's a godsend, I mean that literally, to a number of people that I know that invested in that market that really helped them sort of right there in their tip. And his name's Tanner Morgan. Don't mind mentioning his name. His name's Tanner Morgan. He's awesome. He doesn't take a lot of volume on. He's really good with what he's got. So if you've got somebody down there that took 8 months to get somebody out, had a Erwin as your wholesaler, you would not have had that problem. I have never heard of that in Alabama before. If you people pay your rent there, Chris can attest to, you're not going to be in that house very long. Okay, yes, okay, Tanner's great. Jeff is using Tanner, so that's awesome to hear. And Jeff, he's going to talk to you again, brother, too. We'll talk on the phone sometime. Yes, for those that have asked, this was recorded. Matt actually remembered to hit the record button as we got started today, so it was recorded. If you'd like a copy of the webinar, we'll be glad to send it off to you, so just drop me an email or give me a call. I will be in my office today to take phone calls. I usually am after these webinars. So you've got my number here. If you don't get me and you get my voicemail, just leave me a message. I'll get back to you, or drop me an email, charlie.castro@sbcglobal.net. You can drop me an email there and just say, Charlie, give me a good time to talk. If you'd like to talk to any one of our panelists on the phone and meet them and learn more about their opportunities in their respective markets, I can certainly coordinate that for you. That's what I'm here for, is to quarterback this and get you in touch with these gentlemen that are offering these properties out. So that's what I'm here for. If you want the webinar, raise your hand, send me an email, give me a phone call, I'll get it out to you. And again, I'm going to sit. We're going to get cut off in 5 minutes. We took up our full hour almost today. So I want to thank the guys that were on. Thank you, all you guys, for being here today. This was actually a lot smoother than I anticipated. Having that we have 4 of us on here, not just one, but it was very well done, I thought. So we appreciate that, you guys being here today and all the information you share with everybody. We have another one of these coming up on Thursday. On Thursday, we'll be doing another one of these at the same time at high noon Pacific. Same format, maybe with a few tweaks and changes here and there, but for the most part, we'll be doing the same show on Thursday. So we welcome you to join us for that. If you don't, you'll be seeing the invites going out, so we'll hope to see you. And I'm going to sit here for about another minute or two and see if another question pops up. And if it doesn't, I just want to say thanks everybody for being here. Have a great day, and I look forward to talking to you. So with that, I'm going to stay here for another minute, and then I'm going to sign off. So thanks everybody for being on. Hey, Joe Tilton, look forward to talking to you. Thanks for the note. Question here from Frenchie. Hey, Frenchie, I've always got portfolios of single-family homes. Matter of fact, I probably have more portfolios right now than I've ever had. There's a reason for that, so that's something we can talk about. But I have plenty of portfolios of single-family homes. If you just tell me where you're looking for them at and what you're trying to accomplish, it'll take me about 3 minutes to send you what you need. So give me a call on that. Okay, the person in Kansas City is Jake Hill. No, I'm sorry, Ben Walls. Made a mistake there. Ben Walls is our man in Kansas City. Jay, if you want to give me a call, I will connect you with Ben, and you guys can get on the phone and chat and talk about the awesome market that is Kansas City, Missouri. Okay, I think that's it, guys. Again, my name and number's been up here for a bit, so if anyone wants to give me a call, to our 4 panelists, gentlemen, nice job, and thank you. And with that, I'm going to sign off. Everybody have a great